What a market, huh, guys? Very, very challenging times we are living through. I hope you guys had a nice green day. Let's take a look here. We had 45% of the room green or very green, 27% flat, 28% red or very red. That's pretty good considering the type of market we are trading through. So we'll see what we have to do with tomorrow. Let's take a look here. S&P 500 futures, flat, mostly flat, 44, 21, 25. You can see here as we were watching the the declining line here. We finally had a break at 44.40 and then 44.33, and we are now basically hovering in this new price range. Nasdaq, very similar break right there through 15,000 at the primary pivot on the day. Very similar type of declining line, and you can see here the volume increasing into the close. These types of climactic breaks of declining lines often rebought quickly, so we could have a bit of a morning snapback, in my opinion. The story of the day, of course, is the dollar and the 2 and the 10, which, as you guys are well aware, really have been shooting up. Was I believe the 10-year multi-year highs, right? On the 10-year, if I'm not mistaken. No, sorry, near multi-year highs. So, was it the 2-year? Yeah, we're right there, very close. All right, so crude futures currently 79.22, flattish. Nat gas 2.60. Gold getting beaten down here on the strength of the dollar. We were looking at a potential snapback on the 1941-70 power pivot, and we've just been getting hammered lower on the strength of the dollar. The Bitcoin finally cracking the 29,000 handle, and you're building a kind of an ominous flat base here. So that break of 28,600, you could have interesting two-wave corrective back down to 27.2 on Bitcoin. So we'll be watching that as if the markets continue to go risk off. So definitely keeping a close eye on that. Let's take a look at the indexes. The Dow Jones down half a percentage point today. S&P 500 down 0.75 percentage point. Nasdaq, the biggest loser, 1.15%. Nasdaq 32% above the monthly volume. I think decliners were 3.4 to 1. Advanced decline. Let's take a look here. 2.5 to 1 on the decliners. So definitely the market risk off again on the FOMC minutes. I was wildly incorrect about it being a nothing burger as the market digested the message that I've been hearing for the past 6 months to a year. Regardless, the market not liking it. The VIX at 16.75 at the time of the close. So we had Target and TJX reporting solid earnings per share beats, and in their guidance say they expected things to improve into the second half. We saw in TGT today a strong reversal, piercing reversal, and fade into the bottom of the value area. This I think it was Don who call this out as a potential short idea. I agree with him. So strength solid sell-off in Target. TJX, very different picture. You got a high volume, high wave candle that held the gap. UK rates continued to climb after the UK CPI data kept the door open for additional Bank of England rates. China, on everyone's radar after the dollar yuan pushed above 7.30. And Tesla also at the same time announcing round of price cuts there. U.S. industrial production today and housing starts data was well above expectations, forcing the Atlanta Fed to raise their Q3 GDP now forecast to a whopping 5.8%. U.S. Treasury yields, the two stories in my opinion are the Treasury yields and the dollar moved out to levels not seen since October, with the 10-year closing above 4.25, following the release of the July FOMC minutes this afternoon at 2 o'clock. So after that, we saw markets move to new session lows, cracking important declining lines within their channel. So the big headlines this morning, of course, China vowing to meet annual economic targets to boost investment and consumption. MBA mortgage applications minus 0.8% versus a minus 3.1% prior. Canada housing starts came at 255,000 versus a 244,000 expected. July housing starts came pretty much in line, as did housing permits. Industrial production came in at 1% versus 0.3%. And the GDP now raised to 5.8% from the 5% expected. I don't envy being a Fed head in an environment like this. There's so many different variables. It must be really not a fun job. So the main message from the FOMC July minutes today was that most members said inflation risk could require more hikes. Two officials favored holding policy at July meeting. That's really the key message that we got today. In other headlines from yesterday, this helped to push Tesla lower. Tesla said to cut prices Model S and X by 9%. Second cut of China prices in 3 days. There's a distinct sentiment among many investors that China may be spiraling into dangerous economic waters. The other big story today, Coin winning the approval to sell crypto futures directly to U.S. retail customers. I was expecting a little bit more of a reaction. I bought light into the pre-market looking to add through 84.50 and just never got the chance. In other headlines today, X, that's U.S. Steel, reportedly MT is consulting with bankers about a potential bid for U.S. Steel. In other news, Perigo, that's PRGO, U.S. Appeals Court rules to restrict access to abortion pill mifepristone. All right, try saying that fast 3 times. On the streaming side, churn rates rising for nearly all streaming services as prices increase across the board. Netflix definitely not happy today at all. On Snapchat's My AI goes rogue, posts to stories, but Snap confirms it was just a glitch. A little bit of a HAL 3000 moment there. On Pinterest, BuzzFeed's to show Amazon-sponsored product ads. That's PINS. Pinterest also, some bullish commentary today from analysts on PINS. And you had a really nice bullish engulfing candle today off the 200. Bit of a hot dog for me. I don't love these upper wicks, but it held up reasonably well today given the risk-off nature and selling pressure in the market. On TD Bank, with their survey revealing widespread impact of inflation today, 4 out of 5 customer spending habits were impacted by inflation, leading many to seek relief through savings and rewards. We got to really watch the household savings versus credit card debt data in the coming months. I'm telling you, that could become a real issue. For Uber, NYC Mayor Adams, TLC proposed new rules for rideshare vehicles, talk rules for rideshare vehicles to be zero emissions by 2030. Um, Tip of the hat to Feeling Bullish, who posted the story before all the other news services I was watching. In unusual call activity today, a VFC, that's Victor Frank, excuse me, Victor Frank Charlie, the August 2050 calls activity honored by the offer expiring August 18th. Pinterest, Papa India November Sierra, the August 2550 calls expiring August 18th, and Chewy, CHWY, the 4250 calls. In unusual put activity today, MRVL, the October 45 puts, Hawaiian Electric, Hotel Echo, the December 10 puts, JP Morgan, big put sellers, selling to open the November 135 puts. I guess somebody's interested in owning JP Morgan. UPS, the September 165 puts, and NU, November Uniform, the October 6 puts. So that's the long and short of it. If I had to summarize this market in a couple of sentences, I would say, technical pullback / risk off on strength of dollar and treasury yields. That is the primary theme, adding downward pressure to this market. We were talking this morning about a technical pullback to the June point of control, and we got just that. Whoops. So we were looking for that retest of the 360 360s, and we got a close right at the 362.75 or so. So the market technically is doing what we expected it to do. The tape has been tricky. The order flow has been somewhat choppy, and hard to trade, in my opinion. There were lots of fake outs and shakeouts today, and some decent opportunities, but they were, in many cases, I thought, difficult to trade. So if you're having a hard time in this trading environment, I wouldn't beat myself up too much. It's been difficult. As far as my trading day today, I was holding Tesla from yesterday. We shorted the 234.50s, and it did exactly what we expected it to do, right? Came in and it took out 237. 227.30. We had a bounce, and after the FOMC meeting minutes, a V bottom, a failed platform, and this was your steady sell-off into the close. I had a meeting with T3, and I there's certain trades I get really distracted by, and I get that question like, JR, are you there? Are you paying attention? And so on and so forth. So I just, instead of setting a stop, I closed out the trade. A little bit of regrets, because Tesla continues to do what I thought it was going to do, which is to continue lower. I've got monthly puts in the spiders and the Qs, so I'm capturing some of this downside. But just a beautiful move from yesterday in Tesla. Intraday, I was holding the short and wanted to capture what I thought was going to be the technical snapback off the open, and that's what we got, right? We had a strong piercing engulfing rejection here off the pre-market lows, and went long there, looking for that 233.60, which was our level. This is in terms of order flow, just sellers galore up here. Everyone, in terms of the VWAP anchor, right? everyone who bought past June 8th, their dollar cost average is this 232, 233.70 level. So I knew that this was going to be a tough wall of sellers to get through, and the order flow really confirmed that in real time. So, as far as trading Tesla intraday, for a while there this morning, I was short common, long calls, and that trade really paid off. I figured if, if I'm wrong and Tesla continues to rip, I'll stop out at my common, and I'll have my long calls as a hedge to finance the stop on that tier I had left. So that was a great trade. On what's it called? On Coinbase, I bought a little in the pre-market, right around 8:30 or so, and just on the break of 80, I stopped out of the position. It wasn't doing what I wanted it to do. I thought we would have a little bit of momentum here. I was looking at this falling wedge, bought some of the falling wedge snapback, and I was looking to add through 84.50, the break of pre-market highs, to build a full position, and it just didn't work out, unfortunately. Shorted a little BABA at the open. I think through like 89.50 or 89.70. We caught a move to S3. I covered some here. I was looking for a second leg lower and trailed out break even on my second tier, and it just kind of just built a big old wedge on the day. So just it's what BABA does. It just gives you one nice leg and just does whatever for the rest of the day. Sometimes you catch two juicy legs. Didn't happen today. On Nvidia, I was coming into the day hoping Nvidia would give us that evening star reversal, which triggered today, which is nice. I was a little early, so in this morning, I took the break here. I think 440 into this drop, and I was going to add through 437.50. Didn't get it. Stopped out, I think, at 443.70, something like that. That was annoying. But then I just kept watching the trade and shorted it again through 441.50 for that move into the first target was this 434.55 right here. This is your June 12th anchor, and caught a nice chunk there, which was very very pretty move. On this, I'm sure I'm not the only one who stopped out here. That was really kind of annoying. But it's Nvidia. You really have to tier into your trades properly, or it's very hard. If you trade Nvidia full tier and you're wrong, you can really pay the price. So entered on tiny size here. I was front running the break of 437, and just unfortunately didn't get it. On the second tier, I entered once we cracked 439.70. Added some more, and then added full tier and the break of 437.50 into that 434.50. I didn't want to really trade with distraction, so I covered into my meeting, and then you got that two-wave corrective push and then a rollover, and it closed. You can see right here at that price. I expect more downside from Nvidia tomorrow. 427 is next. You can see here on the daily. Your next set of anchors are right here, 427.84. If you fib this, right there, tip to butt, as they say. What's your 50%? Can't read. This is your 382 is 432. So somewhere between your underneath your 382. That's what I would look for next. So that's Nvidia. Um, let's see, what else did I trade today? I wasn't super active. I really wanted to um, focus on the trade ideas I really liked. Traded some Qs, which is daily occurrence. Nothing amazing about that into the close as we broke down. But other than that, it was just a lot of watching and sitting on positions I had high conviction in. So that was the day. Um, how did you guys feel about today? Out of curiosity, technical damage to the NDX. Is it possible to go over some volume lessons? If not, so you mean on volume profile? We have a bunch published, Ashani, but if you have volume profile questions, definitely feel free to ask. I'm happy to answer anything. The market does look terrible, indeed. All right, let's see. Guy, I got your email and I wasn't kidding. So we'll talk offline. Um, okay, so I got a few questions here. One of you asked, JR, I hope you're getting well settled into your new digs. I know you address this in some form or fashion on an almost daily basis, but I'd like to use the fact that we have some fresh ears in here this week to ask you if you could please summarize the most common causes of and effective methods of overcoming weasel trading. Weasel trading. Okay, so we often tease here. A lot of us in our trading careers have often traded in a very hyperactive, frenzied fashion where we're trading like scared weasels. We enter a position and just out of nervousness, as soon as we see a little green, we exit the trade. When it goes against us, we panic and we exit. Or worse, we don't respect our stops, and for every dollar we make, we lose four. Does that sound familiar? This is a very common type of experience for a lot of traders. So it's a type of attitude or a type of behavioral habit that affects a lot of traders, and it's a universal thing, and it's happened to everyone I've ever met who has traded the markets, and it's something that you need to overcome in order to be successful in this business. Whether you're a scalper or a position trader, one of the things that you need to do is trade with a clear intention at all times. Meaning, in my opinion, to achieve a level of success, you have to really take trades with a very calm mindset and the ability to be very confident in that you're taking every trade you're taking for a specific reason, following a specific game plan that conforms to a trading plan and a strategy. The problem with a lot of traders is that type 11, if you've ever experienced this, you're taking trades and some of the trades work and some of the trades don't work, and at the end of the day you have no idea which of the trades that worked you should have taken and which of the trades that didn't work you should have or not taken. Is that something that you guys maybe experience or experienced on a regular basis? Yeah. This business requires a very high degree of confidence that you're doing the right things for the right reasons. So when you're taking losses, they're either execution errors, technical errors in judgment, or just trades that didn't work. But the one thing you don't want to be experiencing is a giant question mark saying, asking in the back of your head, should I really be in this position? Right? What happens when you take a trade and you have a nagging voice in the back of your head saying, you shouldn't be in this trade. This is a terrible idea. Why did you press that button? Does that ever happen to you guys? Or you're in a trade and your finger hit the short or buy button and you're not even sure why that happened, and all of a sudden you're like, holy shit, I'm in this trade. Okay. What is the likelihood that you're going to be able to manage the trade in a calm and collected fashion, rationally, and let a trade that you don't have a game plan for work to its full completion when you don't have a game plan for it? Right? This is a very common thing. Like a lot of newer traders, they'll take a trade without a game plan for the trade. And then as the trade progresses, they try to figure out what they're going to do. You're tripping like a mofo? Okay. Stay hydrated, Ashani, I guess, is my advice. And also, say no to drugs is important, especially in this business. Say no to drugs. Stay off drugs, kids. All right. Anyways, so, I preach this day in and day out to newer traders. Do not risk capital in the markets unless you're specifically looking for a specific trade. If you're putting money, if you're putting capital to work in the market and you're taking on risk, there has to be a very good reason for you to be doing so. And you need to be very confident that you're taking that trade for the right reason. Additionally, I think a healthy respect for the price cycle is also very important, right? So, for example, triple Qs, right? Just an example. So let's get rid of the pre-market data. Okay. This is today. Okay. This is today's short-lived bull channel. All right. And this is yesterday's price action. Okay. What was the thing that I was saying early in the session about this price action that we absolutely needed to see in order to be bullish on the market? What was the thing we were looking to happen that ended up not manifesting? Do you guys remember? I'm just teasing, Ashani. I'm sure you're not on drugs. Do not worry, I will not call your parents. Does anyone remember? Yeah, a higher high, but we got lots of higher highs here. What specific higher high did we need to see? Do you guys remember? We needed to re-enter the prior value area and hold the primary pivot, okay? If those conditions don't occur, all right, I'm not buying the general markets other than, a very specific set of scalps like Tesla today into 233.72 because we're clearly buying a two-wave corrective snapback into an overhead supply zone. Okay, so trading in a very analytical and conditional fashion will oftentimes guide your decision making, so that you're trading with a much higher degree of confidence based on just basic understanding of the price cycle and and price action, right? Because, what is this if we can't get over the floor trader pivot and we can't take out yesterday's point of control and put in a higher pivot low at yesterday's value area? What does this end up looking like, guys? What does it end up being? Yeah, bearish consolidation. What animal do you guys see here? What is this animal? It's a duck. There's a duck beak, right? What else? A duck rabbit. Here's the rabbit, right? And the rabbit ears. Unconfirmed price action. Okay? When you are in when you're in an orderly ascent in a bearish context, okay? The market doesn't know whether you're dealing with a rabbit or a duck. Nobody knows. Nobody in the world today knew, okay, whether the Qs were going to get through 367.50. All right? But we had a bearish context, right? In the sense that we had a selling climax, and then what's this, guys, right here? This leg lower. What is this? Yeah, you have a sign of weakness, right? And the sign of weakness confirms an existing trend, right? And an existing what? UTAD, right? So as far as context is concerned, this morning, until this pivot was broken and with a prior point of control was held, there were two price action narratives. This one or this one, okay? So in order to trade in the most unweasel-like fashion as possible, part of the skill set you need to develop is the analytical mindset where you're understanding what things need to happen to confirm a particular bias and trade those things with the price cycle. Right? If I'm taking this buy setup in the Qs and I'm assuming without confirmation that this is going to be the time that we break the channel that has been channeling lower for what? Since July 23rd. Am I assuming that I'm all of a sudden I'm going to be right when every single rising channel has mostly failed? Do you see what I'm saying? Does that make sense? So building a very clear awareness of what's most likely to happen based on understanding the price cycle is going to give you a great deal of confidence to actually make sure that you're, to begin with, before you start talking about day trading setups and patterns and strategies and tape reading and order flow and all these other fancy tools, just a basic understanding of price cycle and price action is going to keep you away from a lot of trouble, right? How many of you guys had this line drawn today? Just out of curiosity. Do you see what I'm saying? There's a famous saying about trend trading, right? When you're trading the trend, you're going to be right every time but the last time, right? This is a long. If you're shorting the trend, okay, you're going to be wrong every time but the last time. Okay? So a basic sense of, some people call this market awareness. Some people call this general tradecraft, whatever you want to call it. A basic understanding of what you need to see in order to inform your bias is going to give you the mental flexibility to make the right decisions at the right time. And that's one of the biggest, most important skills you have to build as a trader. Not understanding trade setups, not reading tape, just general market awareness. Because common sense technical analysis is going to keep you out of a lot of trouble. I bet you there were people today who took this inside bar breakout, stopped out, took this engulfing bar reversal, stopped out, thought they were going to get a flat top break here, stopped out, etc., etc., right? If you're trading patterns in a vacuum, you're going to experience a lot of misery time and time again, okay? So that's really important in terms of really trading with a little bit more confidence. The other thing that I think is just as important, okay, is respecting the price cycle, okay? If you take a short at an overhead supply zone when the market is in a narrow state, is this going to be an easier short than, say, trying to short this bear flag here at the end of the day? What trade has the most stored momentum? Okay? Opportunities in the market. Okay? The market is it's like a biological entity. It runs out of energy just like people do. It's made up of people. Okay? Imagine a tube of toothpaste. Okay? This is a tube of toothpaste. We'll call it Crest. Okay? And when you're in a narrow state in the market, building a cause, right? You had effect, cause, effect, cause, and the market is in a narrow state. You have a great deal of stored momentum, right? Toothpaste in the tube with which to actually take advantage of an effect after a cause has been built. What I see a lot of you guys doing is this shit, okay? Oh, I'm going to short the break of day lows. Yeah, okay, Poindexter, you just missed 90% of this move, okay? What happens a lot of the time when you try to short a double bottom after a big move has been done? What are shorts doing here? No, I'm not sponsored by Crest, I promise. Yeah, they're covering. How many times do you guys try to short a double bottom, right? And you get you basically buy the bottom of a flag, you stop out at the top, and then it rolls over and goes without you. Sound familiar? Okay. There are 3 stages of clarity in the market, okay? There's obscurity, like you just don't know. So this morning, we didn't know whether this channel was going to bust through the point of control and trend higher, and today was going to be the day where we have trend reversal, okay? So in this leg here, we are in complete darkness, okay? Two, and this is where technicians, successful traders really thrive, is when you analytically make a distinction that perhaps the rest of the market hasn't made. Okay, all right, up thrust after distribution, selling climax, range, sign of weakness, okay? And this is your LPSY, right? And you understand here that you're most likely to fail into the prior point of control, okay? And then you're able to build a position at the cause into the effect. If you're shorting the double bottom, you're trading the effect of a move that's already mature and on its way to building another cause, okay? So stage 3 is that double bottom, right? It's when the move's already in progress or almost spent, right? There's very little toothpaste left in the tube, and you're trading everything else everyone else is seeing, okay? And this leads to really mediocre setups. What happens, okay, when you're trading mediocre setups to yourself of self to your psychological sense of self-confidence? Are you saying, oh man, I'm in the right trade for the right reason? Or are you saying, holy shit, I'm so late. I can't believe I missed this move. I better catch at least 20 cents so I feel like I participated. And what is your state of mind when you're experiencing those emotions? Are you able to see the market clearly? Or are you looking to catch 20 cents so you can pat yourself in the back and then you end up losing 80 for the 20 cents you wanted to catch? Right? This used to be every novice trader I've ever met. Okay, so understanding where you are in the price cycle, and making sure that you enter trades once you have confirmation of the cause without the effect triggering is essential. Timing is super important. Okay, so I think that is, at least for me, I'm answering this person's question. Those were the two key kind of turnaround moments I had. All right, timing my trades so that I was doing that properly. All right, so I hope that helps. Let's see here. All right, we had a trader email in here. Okay. All right, so this is his trade review. JR, could really use some help with my trading. I'm struggling trading these large cap stocks. I'm worried that it is reinforcing bad habits. I have trouble giving it room and managing it bar by bar. The problem I find is that the large cap stocks have candlesticks that can be upward of 1 point. Yeah, easily. I mean, Nvidia sometimes has $2 or $3 bars. Today I was minus 3R and holding before turning green for the day, but emotional toll took on me. Toll it took on me was taxing. I couldn't hold the full move because I was spent. I'm trying not. I'm trying to not become a degenerate gambler, but it seems when I give the trade room, ultimately it comes back in. It comes back in my favor. Logically, I know this is wrong, and all it takes is one really bad trade to blow up my account. Yes, very dangerous. Please do not gamble with your capital. I traded in Nvidia short today. I liked the direction the market was going, but the first attempt at breaking 441 in Nvidia triggered me emotionally when I got stopped out. I got stopped out on that one too. It was the violent turnaround bar that got me really triggered. In trade 4, I entered a larger size than normally to take and held it until closing in trade 5, leaving money on the table. Okay. All right, we'll take a look here. What kept me in the trade was that it wasn't breaking the pivot. How do you overcome these emotional issues at the beginning of your trading career? How do you stop from getting triggered and revenge trading? Okay, so here are the trades he took. I took this breakdown too. So one, he got filled at 441. Two, he scaled in and added at 438.41, and he stopped out at 441.60. Okay. Trade four, tripled my normal size and went short. Oh man, that is okay. Trade five, closed my position after all that chop. When you're doing this sort of thing, eventually when these trades don't work, they're gonna blow your account up, man. You are playing with fire, dude. It is really important to trade well and to trade in a very emotionally calm and professional way, and that behavior is extremely dangerous. Okay, so let's talk about the trade idea today, okay, and what we were looking for in NVIDIA. So in NVIDIA, you have an anchor VWAP at 439.57. Okay. And you have a... sorry, we have a guest with a baby. I apologize for that. Let me close my door. Okay. And we have another anchored VWAP around 444.32. All right. Before the market opened, we were already looking for NVIDIA to reverse today and take out yesterday's lows. All right. So here's what I do in order to make sure that when I'm wrong, I'm really not paying a heavy price. And when I'm right, I squeeze as much juice out of a trade as I can. Okay. So here is my NVIDIA trade. All right. I'm just going to give you this example. So NVIDIA, I took around, I think 439.80, right as it broke this VWAP anchor. Okay. And I had to stop all the way up here. I was looking for NVIDIA, an NVIDIA add on this trade to 437.50, and then a move much lower. Okay. I was looking for a big move in NVIDIA. So do you guys remember what the first thing I said about entering this trade was? Do you guys remember? Yeah. I said this is an extremely risky trade. Okay? Extremely risky trade, and I'm entering with tiny size so I can build a position if I'm right. So, let's say my risk on this trade was $3,000, okay? And I have a stop that's about $5. I'm looking to capture $10 to $15 on this thing. How many shares am I taking if my risk is $3,000 on a full tier? 600 shares, right? You might be asking, JR, why are you talking about money management when we're talking about psychology? So just give me a minute, you'll see. Okay, if I'm trading at 1/5 of my tier size, okay, what's 1/5 of my tier size in terms of risk? Oh, sorry, 600 shares, not $600. Yeah, okay. So I'm taking 125 shares as a baby position, okay? Okay, good. So on a baby position, do you think I'm likely to be psychologically swayed for the tier size I trade on a $600 loss? Not even a little bit. It's like a freaking mosquito bite. Okay? Okay. So, all right. Let's talk about what happens when the trade starts to work. So, got stopped out of this trade. Okay? And I think we took it short again at 11:10. Okay? At 11:10, we had a much lower high and a 5-minute 50. Okay? So watch this. Now we have $1.57 risk. Okay? And our first target is about $8. Let me just make sure. 441.50. Sorry, $7. Okay? Okay. So now we enter, we build a position at 441.50. Okay? At 441.50, I entered half tier. Okay? So I had a $1,500 risk. How many shares am I taking if I have a $1.50 risk on $1,500 worth of, how many shares am I taking? 1,000 shares. Okay. So, if I'm right, okay, I have a 7-point winner. If I'm wrong, I have a $1.50 loser. Okay? Okay. Now we've made lower highs. The market's weak, right? I have a better idea. I have more conviction that this trade is going to work. I still like the idea. Okay? Do you guys remember where our ad was? You guys remember? Our ad was 437.50. Okay? Right here. Now you might say, JR, why didn't you add it 439.60? Because I thought there was a bigger chance we were going to bounce here. Okay. So, let's do some quick trader math. Okay? My initial risk is $1,500. Okay? By the time I get to my ad at 437.50 on 441.50, how many risk units am I up? On 1,000 shares, right? Just 441.50 to 437.50, right? It's $4. It's 4 points. So if my risk was $1,500, right? This is my risk. My reward on the ad is $4,000. So by the time we hit our ad, how likely is NVIDIA to literally come back to VWAP, take out VWAP, and rip higher? Is that a high probability scenario or a low probability scenario? What do you guys think? Very low, right? So what becomes my dollar cost average? 441.50 plus 437.50 divided by 2, 439.50. Okay? So if I'm right, okay, now I'll have 2,000 shares with a dollar cost average, okay? This is the boring part of trading that changes your psychology, guys. At 439.50. Okay? So 2,000 shares at 439.50 on a target of 434.29. Okay, on an initial risk of $1,500. Okay, I'm making over $9,000 on the trade versus $1,500 of initial risk. Do you guys see how your psychology is going to be directly affected if you're not scaling in properly to trades? Your money management is everything when it comes to your psychological integrity. Is it okay to take a $600 stop initially when the trade didn't work, if you know that if you scale into this trade, you're going to catch 4, 5, 6 times your risk, dollar cost averaged, of course, but you're adding to a winner? How do you think that's going to affect your psychology? Okay? So, going back to being in the right trade for the right reason, okay? I think part of your problem is instead of building a position as the trade proved to you that, okay, micro wedge, right, cause, effect, right? Instead of building a position as the trade worked, what you did was you gambled 3 times your original risk, and instead of using money management as a strategy, you used hope. And if you were wrong, you were going to quadruple your loss. Is that a sustainable method to succeed in the markets? No, it's slow suicide, okay? One of the things you have to sit down and figure out how to do for yourself is to manage money in your trade. And you need to be thinking about this before you take the trade, okay? If you have 1,000, 2,000, 5,000 shares of NVIDIA, the way this moves, your P&L is going to be going up and down $3,000, $4,000 every 5 minutes. You're not going to have the presence of mind to think rationally if you try to game plan this stuff before you take the trade. And even worse, if you're just, swinging Hail Marys, hoping you get lucky, what is going to be your capacity to actually let the freaking trade work? What happened to this trader today as soon as he got back to break even? What happened to this trader? Did he embrace his inner weasel? He cashed out. He was just relieved to avoid a loss, right? That is not a success. That is not a successful long-term strategy for winning in the markets. Okay? You're right directionally, but you were unable to fulfill the full potential of this trade because psychologically you had not created a foundation for the trade in order to let it succeed. You were taking this trade to repair prior damage to your ego, prior psychological damage, prior worries about the losses you had incurred. You hadn't taken this trade to succeed in the long term. And that is a habit that will eventually cause you to fail. This is, they say 98% of traders fail. They fail because of this. Okay? So learn to manage money. Start doing some math. Look, if you're a scalper, okay, and you're the guy who takes the break of this bar and you sell, you sell 2 or 3 minutes into a double bottom, there's a lot less math you need to do. Okay? But if you really want to catch bigger moves in the market, you need to do some money management. And maybe not go in full tier or triple your tier size when you're red on a trade, hoping that it goes better. Tiering into positions so that your losers don't hurt you and your winners pay your bills is how you succeed. They say, "Oh, JR, it's impossible to cut your losers short and let your winners run." Really? That's what successful traders do. It doesn't seem very impossible to me. This is what that looks like. Money management, risk management. It's not sexy. It doesn't sell courses. It doesn't, you don't get, rides in Maseratis and jets, but that is what a professional does day in and day out. Okay? They do math. They understand technical analysis, risk reward, and they tier into their positions. If you tier into your positions properly, you're going to have tiny losers, and once in a while, you're going to hit big winners. Yesterday, guys, for me, my batting average was like 25%. I mean, I had a ton of losing trades, but the trades that worked really good. We caught a $7 move in Tesla, right? Lots of paper cuts, but when I found a trade that was working, I stuck with it, right? Manage money, manage risk, and that's how you're able to succeed long-term in the markets. If you're not in the right trade for the right reason, and you're not managing money correctly for the right reason, you're going to fail. I guarantee it. All right? So that's the end of that rant. I hope I didn't sound too despondent or snooty, but I'm just going on a bit of a rant because I want you guys to really think about money management. Okay? So, love you, bro. I hope you didn't think I was being hard on you on that. I just want just using this as an example. All right. Another trader wrote the same email about the same trade. Okay. So I was short NVIDIA at 10:04, looking for a break of 438 from yesterday's lows. My stop was high. Candle on the 2-minute. What was your criteria for reversing your position? 10:04 candle literally went from 238 to 241.